Hello and welcome everyone to Gold Asset of the Day for the 5th of November, presented by myself, Phil Carr, at the Gold and Silver Club. So what do you need to know as we go into a fresh week here? Well, hedge funds and money managers, they have yet again in the latest week, they've increased their net long positions in both gold and silver contracts. In fact, last week, we again saw that buy opportunity around that 1485 to 1490 level that we suggested on last week's commodity asset of the day for gold. And essentially we saw that breakout that we had anticipated. So we saw a breakout back above 1500 later on in the week, breaking out to 1,514 US dollars per ounce just on Thursday through to Friday. And of course that really worked out very well in our favor. We've in fact been able to bank over 400 points over two positions towards the end of the last week on gold. And what we're looking at the moment as we go into a fresh week here is really range bound trade again. So we are looking to capitalize on this recent range. We've tended to see week to week with higher lows, but also we're starting to, on much higher timeframes with gold, make a move back towards that previous swing high that we saw over the month of September. So what I'm looking at over the course of this week is very similar to what we've seen over the last couple of weeks, which is weakness to come into gold at the beginning of the week. You often get this counterflow move. And the real trick here again is not to FOMO into gold when it's breaking out to its 1 week or 2 week highs. When it starts to get above that 15-20 handle, this is when you want to start thinking about taking profit on your range bound trades and then look to buy back in back sub $1,500. In fact, we saw the price action off the open on Sunday through to Monday break out above 15.10 for gold. We've been waiting very patiently here, banking more profits on our long positions and then looking to buy back in sub $1,500. In fact, today we're seeing the gold price come back to around 1,501 US dollars. Ideally, I'm looking for a move sub 1,500 to build up additional positions this week. So anywhere really between that 1490, if we do dip that low. We're seeing that normal Tuesday sell-off and Monday counterflow as well, which tends to trick a lot of traders. Many inexperienced retail traders, they get a little bit too bearish here on gold as it starts to pull back at the beginning of the week and they get triggered into sell short positions, which then get squeezed later on in the week. So the general cycle that we've seen very often with gold lately is that it will pull back at the beginning of the week, then it will break out from Wednesday onwards, and often we get the surge and the peak of the price over Thursday and Friday. So again, this week, I'm looking to capitalize on these pullbacks. Below 1,500, I like for a buy, but ideally the lower, the better really to establish further long positions and then not FOMOing in. So when we do get a breakout and I'm looking for a move this week back towards 15.15, 15.20, 15.25 later on in the week. So essentially I'm looking for a move back between $1,515 up to $1,525. When we do get a move, if we do see it towards those levels, then I'm looking to bank more profits within these ranges as opposed to FOMOing in at the highs. So don't FOMO, which is of course the fear of missing out. Don't get into gold too high. And of course, on the higher time frames of gold at the moment, we are seeing a nice bull flag formation, which is setting up for a potential breakout. Now, last week, of course, we did see the Federal Reserve, they cut interest rates, which later on in the week did help gold prices go higher. We had non-farm payroll data, which came out stronger than expected, which is helping the dollar get a lift. At the beginning of this week, we've also seen stock markets break out to all-time highs. So all of this right now is putting a bit of pressure on the metals. There's a lot of optimism about the progress between the US and China trade deal. This will all put gold on the back foot for now, but later on we can start to see that optimism start to dissipate, and with that, that's where I'm expecting gold prices to catch a bid later on in the week. Okay, and again, bear in mind that retail traders keep getting stopped out of these positions by selling too low, buying too high, and you really just want to capitalize on the current consolidation with gold, which effectively I see as a buying opportunity under 1,500 US dollars per ounce. So with that, that's been Gold Asset of the Day, and of course, I wish you good trades.